Perfect. So, like I said before, the TDECU stands for Texas Dow Employees Credit Union, and that's how our charter started. It was just 5 employees with Dow Chemical that lent money to another employee to buy a refrigerator. And then and that was in 1955. So since then, everything just, grew from there. We had really good leadership, in the 90s as far as mortgage to really push, the mortgage loan side of TDCU, knowing that that is profitable and, trying to create products and things to help the members of TDCU. So when I get someone and we start the loan process, we have them become part of the credit union. In Texas, as long as they live, work, worship anywhere in Texas, credit unions have changed that way. Before, you had to be, in a specific zip code. You had to, be a part of like Dow Chemical. So all that has changed. Now anyone that lives, works, worships, in or goes to school in Texas, qualifies for to become a member. Like I said, as part of our application process, when we start them, we automatically get them started on the membership, and then they become a member. So after that, it's up to them if they want to, continue, if they want to continue be using our products and services. A lot of people like credit unions because we focus on service. Service to us is number one. So that's a key part. You're not like the big banks where you're just a number. We really focus on the service. And all credit unions are not for profit, meaning if, after the assets that we're supposed to have and paying our bills, anything left over, we give that back to our members. Reduce rates, reduce fees, things like that. So
TDCU is a nonprofit?
All credit unions are not for profit. Yeah.
Really?
Yeah, right. So you have to have certain reserve requirements and things like that as being a financial institution, but all credit unions are owned by the members and not for profit. So that's a big plus when we're trying to help out members. So like I said, since we're really focused on mortgages, a lot of the money we lend is our own money, and we've created some really great products. We do all the vanilla stuff out there, all the stuff that any other mortgage company can do out there as far as FHA, VA, and conventional. We do that. We do it very well. Very competitive on the rate, again, because we're, not for profit. We really want to give our member the best rate. I'm not going to say we're the best rate out there. One day we might, one day we might not, but we're very competitive on your traditional products, FHA, VA, and conventional. We do everything in-house, from, of course, me, the loan officer, processing, underwriter, closing, funding. Everything's done in-house. So we have a lot of control of the loan process, what we can and cannot do. Since, like I said, we're a credit union, and a focus of ours is to lend our own money. When you're able to lend your own money, that just opens the door on the products that you can, put out there, and you can basically make your own rules. So that's just what I want to go over on this left side of this flyer. First product I want to talk about, which is really no one has it, is our 103% product. And it's a conventional product. It's not down payment assistance. It's a conventional portfolio product. It's our own money we lend. So we're basically making our own rules. On this 103, there's no down payment. And what we do is we can finance up to 3% of the closing costs. So if it's a $300,000 house, we can add $9,000 back on top and add that to the loan. So their sales price is $300,000, loan amount would be $309,000. And that $9,000 can be used for closing cost. So let's say on a $300,000, they put $3,000 earnest money. Closing costs, let's say, are $8,000. They can get back, some of their earnest money. So a lot of people on this 103, because of the earnest money, and if there's any seller concessions, a lot of times they're getting money back at closing. So really covers everything. Because it's a high risk, meaning that we're lending 3% over the sales price and typically the appraised value. It just has to appraise for the sales price. Doesn't have to appraise for the, 309 on a $300,000 house. So
Really?
yeah, we're extending on our own. Yeah, exactly. We make the rules. So because of that fact, the appraisal just has to come in at the sales price. There is no PMI on it because it is our own product. We don't require mortgage insurance. As you know, anything out there as far as FHA conventional, you put, FHA, no matter what, you're going to have mortgage insurance. Conventional, anytime you put less than 20% down, you're going to have monthly mortgage insurance. Yes.
Would you like us to wait to the end to ask questions?
No, please. It's better you
On
ask.
that product right there, where you say
Yes.
no PMI, what's the minimum credit score?
Minimum
I don't see
credit
that.
score of 660. And that's very reasonable. It's not real high, it's not real low. There's other companies out there that, have 100% financing and it's a lot higher. So I think we're real competitive at the 660 credit score. So of course, no PMI on this product. Because it is a high risk, we do have to put it on an arm. So it is on a 7-1 arm.
And could you explain that? Because we have a lot of new agents that may not understand what a 7-arm means.
So 7-1 arm is it is an adjustable rate. However, it's fixed for the first 7 years. So 7 years, the rate is fixed. Doesn't start adjusting till year 8. So someone that doesn't have a lot of funds, does not want to put money, out, this gives them 7 years to refinance. So a lot of times people hear adjustable rate mortgage and they get very scared because of what happened in 2008. A lot of people were priced out of their house because what was happening pre-2008 is there was a lot of teaser. So someone would say, okay, your payment's going to be based off of 2%, but we're going to charge you 5%. That negative difference, 3%, is going to be applied to the back of your loan. That's why ARM's got a bad name, because it's called negative amortization. All that negative interest was applied to the back of the loan. Values dropped, people were upside down. That's why we had all those foreclosures. And then they were letting people, without taxes and insurance on their payments. So overall, that does scare some people. But if, I can fully explain that to them, if they are in need of this loan because of, the lack of funds, for a down payment and closing costs. But it's fixed for 7 years. At year 8 is when it starts adjusting, and it still has all arms have caps. So the most it could go up the next year is 2% per year, and then 6% above that. So it's not going to be like, in 5 years, they're going to be at 20%, because it has its caps. We want to protect them. It can only go so much per year, but it gives them a full 7 years to refinance. Very few of these are still on our portfolio. I've been with TDECU 11 years, and we've been doing this product since I've been there. And 99, or I'd say 95% of the people refinance it.
Okay, that's what I was going to ask. When you say not on your portfolio, they can finance out of it.
Yeah, they refinance with us like on a fixed rate. So yeah, it's very rare we'll see these over 3-4 years. And that's why we set it at 7, because something usually happens between years 3 and 7, whether they move up, whether they refinance, sell, things like that.
Yeah.
So that's why we put it at 7, because we know, high percentage, whether it's refinance or move up, something's going to happen. So that gives them plenty of time, because we definitely didn't want to do like a 3-year. That's cutting it really close, because especially with rates, this gives someone, rates are cyclical. They're going to go up, they're going to come down. And that's just what happened over time. And we've seen 7 years give someone plenty of time if they want to refinance it.
So this is not rate based? You guys come up with a rate for this particular product?
Yeah, so like on this one, it is higher. So this one, because no down payment, because we're lending 103%, the rate on this one right now is 8.625. So it is higher, but
To get you in if you can afford it.
yeah, but it gets you in with no money, and you usually get money back. So that's the offset on it. So excellent product. Like I said, it is a conventional loan. I get a lot of agents think it's down payment assistance. There's no income limits. It's not tied to a specific area. You can buy the house anywhere, have any type of income. It's not just for first-time home buyers. So anyone that's, could own a current property and rent it and then buy another property. I have people that love this product because of that. They become long-term clients. They buy one property 103, a year, 2 years later, they buy another property 103, rent that one. Best, cheapest way to get into the investment business with not having to buy an investment property, put 15, 20% down. Exactly. So,
So you don't have to live in it?
yes, so it has to be owner occupied initially, but I've done people 11, 12 months plus after they bought it and they've decided to move on to another property. So if it makes sense, we'll do it.
Like that.
And like I said, that's an excellent vehicle to get into investment property.
Now, is it just, it has to be a single family home, or could you do it for like multifamily? If you
It has
live
to
in-
be single family, single family only on that. The next product down is our Easy in 30. That one is just a straight zero down and the buyer's responsible for closing costs. So we're not financing it in. Because of that factor, it's less risk to us. So we do that one on a 30-year mortgage, 30-year fixed rate. So the Easy in 30, zero down payment, no PMI, 30-year fixed. Right now that rate's around 7.5. We're higher than market. Market's upper 6s, 7s, but you're
No
going
down
in with
payment.
no down payment.
So can you go into the 30-year also, relying on sellers' concessions for that?
Yes,
Okay.
and we allow up to 6%. So a lot of the people that are real scared of the arms and they don't have any money, they can do the zero down 30-year fixed and get the seller to pay all their closing costs. Because 6% is more than enough. Closing costs usually are 3.5 to 4.5 typically. So if you get, 5%, I have few coming in with 6% contribution. Whatever's left over, we buy down the rate, get them
Okay.
closer to market rate. So we allow up to the 6% of contribution. Excellent option for that instance if, they want the lower rate, they want the 30-year fixed. Closing costs aren't too high. As a credit union, the only thing we charge is a 1% origination fee. We don't charge processing, underwriting, admin, all that type of stuff. It's just a 1% origination fee. Then if I can sign up Michael as a preferred company with us, we take out that 1% origination.
Of course you can.
Yeah.
We'll see how
So
they act, man.
Exactly,
You know, they
right?
deserve.
So that's an excellent plus there because you won't have the 1% origination. Closing costs come in at that 3.5. They're just paying, third-party fees, title, stuff like that. So
Yeah.
really reduces the amount, that they need. This one, just like the top one, no income limits, no area limits. You don't have to be a first-time home buyer. The area isn't limited. It's not down payment assistance, just straight conventional. And that's what a lot of seller listing agents like, that it's not an FHA or, a down payment assistance. Buyers don't have to go through any type of training or anything. If it's
No
going to be
class.
down, exactly,
It's
no
still
class.
60.
660 on that one also. So both of these are at the 660. Any questions on those?
It's amazing.
Perfect. And then we'll, on both of these, we go up to 45% debt to income ratio. So the
That's good.
DTI is 45, pretty flexible, I feel.
Y'all make the
we're-
rules.
Exactly, exactly. On these and any of our products, we're currently running 25 days and less as far as closing. My turn time's 22 right now. Each kind of loan officer's kind of different, but the company focuses on 25 or less. So, you said something 20 to 25, we can definitely hit it.
Yeah, you read my mind. Like I literally had asking this.
Yeah. And some people think that, oh, it's a zero down product, it's your own product. Do you take 60 days to close?
Mhm.
No, it's our own product. We control everything and we can close it, very quickly because everything's done in-house. Another plus is we keep the servicing on all our products. So we're not going to close them and then their loan's going to be sold to, Mr. Cooper or ABC Mortgage. If it's a conventional VA or FHA, we might sell it in the secondary market, which doesn't change the front. We keep the servicing. we're a credit union focusing on service, so we always want them to make their payment to us and always have the ability for us to help them if they have any issues. So we keep all of our loans. We do not sell anything. Another plus is that we're probably one of the, I haven't heard of another lender. We don't charge the appraisal fee up front. And we do that for our members. We know they're paying earnest money, they're paying the inspection fee, all that type of stuff. We always charge the appraisal at closing. So
Say that
big
again.
plus.
I'm recording. Make sure I'm recording that. Make sure I'm recording that.
Huge plus. Because we know people, you know, like I said, earnest money, inspection fee, things like that are big cost up front. So we charge the appraisal at closing. Now, if something happens, you know, we try and collect it from the borrower, the member. Typically, and the only place that kind of hurts us is on home equity loans, because you really can't make the buyer pay the appraisal fee if they don't want to, but that's kind of across the board. So sometimes we don't collect on it, but we feel that's a cost of doing business, and that just helps every other member where the transaction's going to go through smoothly. So it's a big plus.
Well, man, I don't know any other lender that do that either, so.
Right. I haven't found one. Some that do the 100. There's some lender out there that do 105, but it's like crazy. They'll do 105, but it's like crazy requirements, like 760 score. You know, you have to, you know, jump through a
That ain't
ton of
helping
hoops.
nobody.
Exactly. It's hard to find. Couple other unique products that we do because it's, you know, internal wise.
What's up?
Yeah. There you go.
Okay.
Perfect. We have an investment property product. When rates are lower, it's pretty attractive because it's tied to an arm too. This one's tied to a 10-year arm instead of 7. But it only requires 15% down. There's no mortgage insurance on it. Most investment, you know, requirements out there are 20% down. There's no mortgage insurance because you're putting 20. We allow up to 6% seller contributions on it. The only thing with this one too is it's on the 10-year arm and it's amortized for 20 years. So, you know, if someone just needs or wants that extra 5% less because they want to use it to, you know, put it into the property, this is a good product for them. We've seen on investment properties, definitely something happens within the first few years, whether they sell it, refinance it, do that type of stuff, but we still set this arm at 10 years in case they want to keep it. You know, when it starts adjusting, you'll be halfway done with the loan anyways.
Yeah, true.
So
What's the interest rate on that one y'all typically see?
that one's in the mid-8s because it is tied to an arm right now. As you know, treasuries are up there currently. More attractive when rates drop because then it's, you know, a lot closer. We went through that COVID time where arms were lower than fixed. So, you know, it was really attractive. We did a lot of them then, but just so you know, if you have an investment person and they're cutting it close on that 20% plus closing costs, this is a real good option for them.
And it's only single family?
Single family, correct. Trying to get them to do multifamily, but
They're not ready yet.
yeah, they're still working on it. Some other options, condo loans for a traditional condo or yes, sure.
Sorry.
No,
My mind is
perfect.
slow. So in investment properties,
Mhm.
do you guys have the standard rules in place that it must be 100 miles apart from your first property or something like that, or no?
No, that's more second
The
homes.
second home,
Investment
okay.
could be next door. That doesn't matter for investment properties, whether it's conventional conforming with 20% down or our product. It doesn't have to be a certain distance away.
Okay.
The like FHA, if you have a current FHA and then you want to buy another home FHA and it makes sense, you're moving up or empty nester, that's when that 100-mile rule applies. But if you're buying investment property, yeah, that doesn't matter because it's investment.
Okay.
Condo loans, like I was saying, we're not great on traditional condo, but where our specialty is non-warrantable. So you have a condo that, you know, was an apartment complex and they transition it into condos, or condo complex where investment is over 30%. condo, like I'm doing one right now, it's a 1 bedroom, 1 bath.
Mhm.
A lot of lenders don't like that. So those unique condo situations, that we're excellent at that. We don't, there's something called a condo questionnaire when you do a condo.
Mhm.
We require one to be filled out, but there's nothing on there that'll kill the transaction.
Hmm.
Where other lenders, that's what they base everything
Mhm.
off of.
Yeah.
If there's an issue on there that doesn't follow their guidelines, that's gonna kick it out. And that's where we come in and, help out. We've done yes.
Is there a specific part of the price that the condo needs to be, like, more than 100 or?
So our minimum loan amount on condos is 85,000. That's the minimum loan amount. However, like I'm doing one in Pasadena, the loan amount's 67.5. So we'll make exception because this is an internal product. The reason why we set it at 85 is that we're worried about the condition. So if we're gonna make an exception at a lower loan amount, that's what management is gonna look at immediately to make sure, hey, this one's at 67.5 loan amount, is the condition okay?
Mm.
And like on mine, yeah, it was fine. It's just, it's a 1 bedroom, 1 bath, very affordable condo. So we had to get what we call a waiver for that to go under the 85, but the baseline is 85,000. On that condo loan, like I said, it's 5% down. Again, it's an in-house product, so there's no mortgage insurance on it either. Excellent product. Like I said, if you run into, an issue with the condo, we can definitely, take it in, and it's our own in-house product. We have what we call a jumbo junior, maximum conforming limit right now, 766,550. That's where you can do a conventional loan up to without going into the jumbo. So we created a product from that 766,550 to 900,000. And we allowed just 5% down. It's on our 10-1 arm. We know they're going to refinance, but it just gives someone the ability to go in with least amount possible and not have mortgage insurance. A lot of time jumbos are required 10% down and they have mortgage insurance. So this is just an additional option, and this is for single family residents. So it's just a good option if someone's in that jumbo, over 766 to the 900,000. Great product, because like I said, there's no mortgage insurance, and we only require 5% down on it. We're really good at land loans. We do land, so if anyone has someone that's doing land, anything 5 acres or less, we can do it at 10% down. Anything over 5 acres requires 20% down. And I've done a 6,000 square foot lot to I think it was 280 acres in the hill country. So we really have no limit on acreage. And we'll go, I believe, maximum loan amount 1.2 million on the land, all the way down to 40,000. So yeah, in the land product. So excellent product. Again, 10% down, no MI. Rates on that is in the 9s, just because it's land that's much, higher risk. But a lot of times people are getting these to either build on it, which leads me to the next product, our construction to perm. We have a one-time close construction to perm product, where if they buy the land first, we can do a one-time close, which it combines the construction loan and the permanent financing into one loan. So if you have a borrower that goes and buys a piece of land and they eventually they want to build on it, they can come to us and we can do the construction and permanent financing. So what that is it will build a loan for them. And let's say they get with the builder, a cost to build are 300,000. The land was 100,000. Our first draw on the construction loan is to pay off the land so we can make one loan. So now they have a balance of 100,000. They'll just pay interest on that 100,000. And then we start doing draws of that 300,000 to complete the house. Once the home is complete, we do what we call permanent financing. They don't have to close again. We just modify the note to the permanent financing we agreed upon at the beginning of the process. So what this does, it just saves closings and closing costs. Most people have to buy the land, get construction financing, pay closing costs on that, and then refinance that construction financing and pay closing costs on that. So that's why we call it a one-time close, is because we can close it upfront. And there's two ways on that. Like I said, if they own the land already, let's say they don't own the land, then we can include it all together, where we'll close the land, do the construction loan, and then convert it to the permanent financing. There, they have truly just one closing. But in that instance, they're gonna have to have the builder approved through us, plan specifications. So, it's kind of a drawn out. But if you have someone wants to build a custom home, I can definitely talk to them about the options, with that, because if they go in and they buy the land first, and that's gonna give them time to do the plans, the specifications, then, there's, if they own the land, then we'll lend 90% of the appraised value. So typically, they put 10% down on the land, we'll use the value of the land, and then we'll lend 90% of the appraised value because they already own the land. So it's kind of like a refinance. If we're doing the full package where we're doing land, construction, and permanent financing, we'll take acquisition costs. So if everything's costing 400,000 and the land is part of that initial transaction, then they have to put 10% down of total acquisition. So there's, kind of two options that they can go with if they're looking to build.
But these are all instances where they're gonna build, but it's gonna be their primary residence.
Right.
So
Right.
from an investment standpoint.
Yeah, investment, we don't do it as far as structure to primary, correct. Excellent product there. Like I said, we do quite a bit of those because, people have owned a piece of land for a long time and then they want to build on it. We're definitely the people to go on that. We do a lot of those construction to perm, one-time closes is what we call them. So excellent product. So at the bottom of this, you'll see my QR code. If you have someone that's interested on applying, they can use that QR code. I can also co-brand. So we have the app is Simple Nexus. And I recommend, you to let me know if you want to co-brand that app, because when we co-brand it, you'll have the app and you can forward it to your clients. When it's co-branded, it's great because it'll let you know once they download the app, and it'll let you know once they apply. And it also lets you know if they've downloaded it, started and haven't finished the application. It really keeps you up to date, on what's happening. You can just use a QR code and they can apply through that. And I can send you a link also, which that link is that tdcu.org/ms-mm1. That's a link for that. But I recommend if you want to do, to let them know is for us to co-brand, because it really updates you on what's happening.
What are the steps to go through the co-branding?
You just need to send me a picture and your logo, contact info. That is it.
That's it.
Then I can
So
easily
just
set it
email
up.
it.
Yeah, just email me that information and I can definitely do the co-brand. Realtors love it because you'll know once you forward it, once they've downloaded it, once they've applied, really keeps you up to date on everything. So if they just do the QR code, make sure you text me or email me, hey, I have Mr. and Mr. Smith applying. That way I can look out for them and know it's coming from you. But I highly recommend to do the co-brand. A lot better, a lot easier. Anyone have any questions on that? On any of that?
Let's see if we got any questions.
Oh,
Any
sure.
questions in the chat?
Thank you.
From everything we spoke of is a single family, the
Yes,
jumbo junior and the jumbo.
yes. I can do multi-unit, but that's just through the conforming conventional. 2-unit, 4-unit, we can definitely do that if needed. On the conventional conforming, like,
Huge right here.
yeah, Fannie Mae,
Oh.
yeah. So, and then like FHA allows you to live in one unit,
Yeah.
rent out the other, so we can do
But the
that also.
conforming loans, those are pretty straightforward. Y'all don't really have any control over those.
Right, those are the Fannie Mae, like, just like everybody else,
It's
we
standard.
follow the rules that they have to follow also. Exactly. And like I said, we do those too, we do them well, just like within, as any other lender. Plus is probably gonna be the fees and a competitive rate. You know, if you do use us for FHA, VA and conventional, especially if we can partner up and you don't have to charge the origination fee, so. Excellent.
You're saying it'll be more affordable for the client anyway.
Right.
Gotcha.
More
Even though
affordable
it's
as far as cost and
Yeah.
we're real competitive. We have one promo going on right now called the rate match. So if if they come to you and they say, I've already been pre-approved through Wells Fargo, here's my fee worksheet or loan estimate. You give them to us, we typically do either match it or beat it as far as the rate. So we have some flexibility, just like with any lender, the way rates are set, there's flexibility always. So we want to get the business, so you send someone to us and we'll definitely, try and match or beat that rate. It's pretty rare that we can't do it, but sometimes, like a builder, they're offering 4.99. That's just about in the ballpark. And as you know, they buy that money in bulk and, do it that way. But anything else, we're very, 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 very competitive on it. Any questions on that?
We don't have any questions. We don't have any questions in the chat. No questions in the chat?
Excellent. So just wanted to go over a couple. So I wanted to pass these around because I know you're out there trying to get business, like all of us. So wanted to show you a couple tools that, other realtors are using and you can pass it around. I have this flyer.
Let me do this so they can see it.
Man, I'm sorry, I do have a question.
I'm gonna move the background.
Man, while you're doing that, I have a question about the construction to perm. What's the credit on that one?
Credit is
Ew.
640 on that one.
640, okay.
Yeah.
Thanks.
Yes. No, she wasn't supposed to tell that.
You need to say something, Jay?
No. Rick wanted me out.
He wanted you out?
See from back there.
Thank you.
Everybody promised me they was gonna be on, so he said I'm taking my vote.
Oh, that's what it is. Okay, now they'll be able to see the screen.
Okay. So I have this flyer here, and I'll pass it around. And if anyone wants it, just email me. I'm going to pass my cards out. So I have a lot of agents that use, of course, my contact info is at the bottom, but use, from the QR code up for any social media marketing or, flyers as far as, open house, anything like that. So just wanted to, if you need something that you want to post out there and say, hey, I, have this new product now that I can offer to, clients, especially if they're sitting on the fence. We see that a lot with this product is, especially in the current economy, people are paying their bills, they're paying that high rent and, paying high groceries, and it's just hard for them to save that money for the down payment. So, even FHA is 3.5% down plus closing costs. So, I have a lot of agents that use this. I have a 103 if you want to promote the 103, but I will pass this around. If you need me to, if you need me to send, that information, please let me know, and that way you can use it, for your social media. Perfect. And then, so next, we've been working on, I work with a lot of HPD officers. So the realtor that I deal with, she's with a large real estate company, and they have, which it's Coldwell Banker, they have guaranteed rate affinity that's tied to them. So they don't allow like any type of partnership. So I can't offer her clients the 1% discount like we'll be able to offer yours. So we're creating this new promo where We call it community champions. So any type of firefighter, police officer, doctor, school worker, anything like that, we're gonna give them up to 1.5% discount. It's gonna come out in March. But I just wanted to give you a heads up on that because that's gonna open up some doors for you to do some marketing.
Close to 100% financing?
Yes, on the 100%.
So not
Yeah.
heroes, what do you call anyone?
Community champions.
Oh,
And you say
So-
poll workers, not just teachers.
Any any person that works for school, janitor, all the way up to the, superintendent. We'll give them that 1.5% discount. Military, police, anything like that. So what I've done in the past is, and I'm gonna pass around this flyer, and this is with this agent. You're gonna see that. I can do, I've done this police. The 100% is not tailored to police, but this is just how her and I market it to the police officers. A lot of times they think it's
Same thing for firefighters. or
Teachers.
Teacher branding one. and they say that.
exactly, and that's what I've done before. I have a guy in Dallas, no one's done it here. But one of my agents in Dallas, I put a firefighter one together for him. He went to firehouses and said, hey, can you put this up on your board? I have this special product for firefighters. It's not a special product for him, but that's the way he promoted it to him. Went out there to the firehouses and just dropped them off. He has and continues to get these groups like policemen, firefighters, teachers, they talk. So, if you get out there and promote it, it's gonna get out there and help you get additional business. So, just want to let you know, if you want a flyer, a teacher, your spouse is a teacher, or anything like that. I've had people that, in their break room post the teacher, and we've gotten business off of that. She promotes to police officers. I have that guy in Dallas that promotes to firefighters. I have a doctor one also, any people in the medical field, anyone in the medical field,
What program they do?
the same 100%. We're gonna offer that 1.5 discount also. Yeah, so in the meantime, with your people, we can do the 1%. So we'll, get them in at the 100 and they don't have to pay the 1% origination. And then when the 1.5 comes, it's gonna be an additional promotion.
Gotcha.
Yes,
So
sir.
what do we have to do, the brokerage have to do for you to be the preferred?
I'll have one of my business development officers get in contact with you, and it's just a form you sign and it's done. Yeah.
Okay. So
And the form is more that we're gonna take care of you than you have to do anything.
That additional 1.5% that can be used to closing, right?
Yes, that's foreclosing, correct? Because they're gonna go on the 100, so that 1.5% is gonna eat up the 1% origination and another 0.5% on closing costs. So very helpful, especially we're gonna start transitioning, lower rates are gonna be lower. There's gonna be more demand. That just gives your buyer an additional advantage, on the offer that you're gonna make. So big plus. Yes.
Is there any, let's say creative financing, like if they are self-employed or no dots or anything?
No, the only thing we're currently working on right now is I-10. So we don't do it now, but our bank, the TDECU Credit Union side, allows members to join if they just have an I-10. So mortgage, we want to take care of those people. So we're currently working on an I-10. The no income verification stuff, self-employed, we really don't have anything that's, there's some people that do like bank statements, things like that, but we're currently
So
not.
just a traditional tax return and
Right,
W-2s?
2 years.
they got
The only-
to work.
The
Not
only,
that they're not working, it's just how they get paid.
right,
Right.
so we have since we have that flexibility, we have that 10-1 arm product. We've done people with just 1 year of tax returns, they were W-2 in the same line of work, and then now they're self-employed. Any traditional lending, you still have to get the 2 years.
Right.
We have that flexibility on one of our products to say, hey, look, they were W-2 for 5 years. Now they want to do it on their own. We have 1 full year of tax returns. We have year-to-date income. Hey, we have that flexibility, we'll do it. So in that instance, if you have a kind of a unique situation and, that instance we can do, but if someone just started, or like I had someone went W-2 to 1099 3 months ago, there's nothing I can do in that aspect. It's even a different field that he's in, so. We don't know if that'll come back, that, caused a lot of the issues that we had in 2008. I mean, even myself, I was doing a ton of no income verification loans. And those are some of the ones that, got hit because we would go off, okay, you tell me, I make 12,000 a month. Okay, that's what we put on there. And then, then they couldn't afford the payment. So that's why it still hasn't came back. Like I said, there is some, exactly. There is some products out there like bank statements. There's lenders that ask for like 1 year of bank statements and then use like 70% of the gross money that's coming in and use that as income, but we haven't done anything in that aspect. Right. Any questions on these? Like I said, if you want me to do a joint flyer or want that information, I'll hand out all my cards. Just email me, text me, and I'll send that out. The only other thing I wanted to hand out was this. To me, this is big. I don't know if you deal with any lenders that which blows my mind, but any lenders that tell you like after hours or weekends that they, I have realtors that I deal with currently right now. They'll call me on Sunday and they'll be like, man, I'm sorry, I'm calling you. To me, I'm in this business. A lot of what you're gonna do is gonna be evenings and weekends. Thank God my kids are in college, so I have that flexibility. I consider myself a weekend lender. That's what I want to put out there, because if you have a question, which happens a lot, or you're in front of a client, and it's Saturday, Sunday, Friday evening, please give me a call. If I don't answer, you leave a message or text me, I'll get back to you as quickly as I can. So I just want to put that out there because, like I said, I've had agents that, I had a client on Saturday and I didn't want to call you because it was Saturday. You're in front of a client. Exactly.
Can I see that flyer?
So I put it in group me.
Oh, okay, good, thanks.
So I'll do pre-qualifications if you want. What's big too is I have a lot of agents that if they're doing an open house to include the 100% financing on there. So I'll do like the 103, the 100 and an FHA, or if it's, higher price, maybe a conventional. That way, if you're at the open house, hey, on this house, we have 100% financing. That'll catch, the ear of that buyer and say, hey, and that it'll have it broken out, how much they'll need to close, their monthly payment, things like that. So if you're, need one of those, again, just let me know and I'll definitely, get that out to you. Because to me, this is an excellent product to help you get additional business because not a lot of people have it. So, it really is a great product.
So the only difference between the 100% financing product and the 103% product is the interest rate will be higher.
Right.
But both of them are on, right?
No, the 100% is a 30-year
So
fix.
it's not an on. Okay.
Right.
So it's the fact it's not an arm and the fact that the interest rate is gonna be high.
Right. So the only difference on the 100, of course, is that it's a 30-year fixed, and then buyer's responsible for closing costs.
Yeah.
So that's the only thing. And then the 103, we can finance up to 3% of the closing costs into, and still get seller concession. So I have people that get a good seller concession amount will, either eat up, buy down the rate, and then make sure they get their earnest money back.
Yeah.
So excellent product.
I have a question about the USDA. Y'all do USDA?
No, we don't, because we have the 100. So USDA, it's a government type loan. There's income limits on USDA. There's area requirements on USDA. So, I have builders I work with that are in outer skirts, and a lot of times they're sending me the buyer that wants to go that route because their income's too high. So if you have a combined income and they use everybody in the house, then they might not qualify. So that's why we don't use or do USDA, because we have this product.
Okay.
Already. Any other questions on anything?
I don't know if this was asked, is for the 103 and the 100, is there a purchase price limit on those?
So we'll go up to the conforming limit, which is the 766 550. That's the loan amount. That's kind of your maximum price. We've done some, because usually like, let's say you have someone that's like at, 790. It's a lot cheaper than to put the difference of 790 to 766 than going jumbo, putting 5 or 10% down. So that's just the maximum loan amount is 766 550. So we'll go to that amount. So that's another +2. We'll go the full conforming limit. There's some other credit unions that offer 100% financing, but then they'll cap it at 500,000. So we'll do the full conforming limit on it. That's a good question. Any other questions on anything? Anyone? No? Hopefully, anytime I'm gonna pass out my cards, if you have questions, like I said, just feel free to call me. If I'm in a meeting like this,
Thank you.
oh, thank you.
Well, hold on.
Questions?
I'm gonna say something.
All right.
All right. First of all, I want to say, Matt, the products are very innovative, right? And this is to everybody that's online and this everybody that's in here. What Matt is presenting, he's really giving you all, we talk a lot about marketing, right? We talk about marketing, we talk about value, and just Matt has provided you a list of things that you can use to set yourself apart from the other 50,000 realtors that are in our marketplace. You really need to lean in. Like even in my mind, I'm thinking about that 103% loan product can really put you in front of a lot of people and get you chosen over a lot of other agents that don't know about this. I'm very familiar with TDECU, but I didn't know anything about these loan products that TDECU offers, and they can control it because it's their product and there's all this flexibility. Like I didn't know anything about any of that. So you can imagine nobody knows. Not as many people need to know.
You're right,
about
though.
it,
You're
right?
right.
So with that being the case, let's take advantage of it, right? Let's really get out there. Let's really start talking and putting this stuff in front of clients and people and giving people a reason to call you back, right? We get tripped up on, well, I'm calling, nobody answering, nobody this, nobody that, because you ain't bringing nothing. But now you bring stuff like this, even if they're not ready, they're going to call and ask questions and they're going to tell other people. And that's what's going to help you grow your business. So Matt, I appreciate it. The canes was cool, but the loan product,
Yeah.
we really
Awesome.
appreciate it, man. So thank you so much.
No problem. One more thing. So, since the credit requirement is 660, I do get a lot of people that are a little under that. I've helped people down to like 605 get to the 660. I can do rapid rescoring. So just so you know, if someone tells you, oh, my score is, 650, 645, still let me talk to them because there might be a possibility we can get that rate. And I've done this a lot. We run the simulator. It'll tell us, hey, if they pay down this credit card to this amount, it'll get them to the 660. So don't count them out. If they think their score's a little below that, let us take a shot and see if we can get them over the 660.
But that's only for your in-house products as well. You still have your other standard rates of FHA.
Right.
Okay.
Yeah, that's
So
the
you
only
still
thing.
have a full package.
Right. Yeah. If
It's
someone
in
comes to
addition
me
to
and they're
that.
like at 605,
Right.
we know, hey, we need to take them FHA if
Right.
there's no route to get them to the 660 immediately. Or some people, we put them on a path to get them, because they just don't have any money and they can't go FHA.
Mhm.
Hey, you need to do this, this, and this, so we can get your score to 660 and get you into the zero down.
Mhm.
It's just an extra push for your in-house.
Yeah.
Exactly.
Well, I mean, but even
Yeah.
with the conforming, the FHA, they still get a discount by using you because we're gonna sign that agreement.
Exactly.
And the client
We
will
won't
have
have origination.
the origination fee. So,
Correct.
I mean, it's a great relationships and a partnership. Jackie, phenomenal job. Jackie's our head of the West office. So she
Nice.
put this together, brought us all here together for the very first event. I think it was a great success, Jackie. So you and Rick, man, good job.
Thank you.
Fantastic.
Can I have everyone's card?
Okay,
That way I
so
can-
before I close the screen for people that are online, thank y'all for participating. we're about to wrap things, and it looks like my laptop is about to shut y'all down anyway.
Perfect timing.
But a couple of more events that we have today. So we have our real estate career night. Me and Laverne are gonna be at the corporate office. So at 5 o'clock, if y'all wanna come by, my ACC interns, if y'all wanna come by, I know y'all had class today. And then we're also, we're not doing the lead distribution session. I know I put that in the group meet. We're not gonna do that today. Because I'm gonna be at the Velvet Oak Tavern. We're in partnership with the American Caribbean Chamber of Commerce. I put that flyer in there. So we're gonna be there between 5:30 and 7:30. And one of a person that's campaigning for office, State Representative Jarvis Johnson, is gonna be there as well. So there's an opportunity to meet some people and rub some elbows. So I'll be there as well. But with that being said, man, thank you, Matt.
No problem.
And,
Thank you.
Thank you all. We'll see y'all later.
Yes.